Welcome. Good morning, good afternoon, good evening. Thank you guys for joining once again the 9 Innings Podcast hosted by yours truly, Kevin Thompson, founder and CEO of 9 Innings Capital Group. Thank you guys for subscribing to the channel here at the YouTube station. Thank you guys for going to the book, MLB and CFP, to listening to that book. Thank you guys for that. Thank you guys for now listening to our podcast channel on Apple, iTunes, 9 Innings Capital Group, and also on SoundCloud. And also thank you guys for listening and going to our www.9inningscapitalgroup.com website and checking that out. We love the traffic. Thank you guys for that. Go ahead and book an appointment if you have any questions, or go to 9innings@9icapgroup.com to ask questions. So now we got all that out of the way. I get it, guys. I get it. You see a stock go up 10, 15, 20, 50% in a matter of hours, in a matter of days, and you sit there and you're wondering, man, should I get into this thing? I can make some quick money. You start thinking about all the things you can buy, all the things you can do, all the debt you can pay off. I get it. So today, that's what we're here to talk about. FOMO and what it all means. Let's get it. So, FOMO and what it all means. I know you love the title. That's why I did it for you guys. So, FOMO, the fear of missing out. This is a human construct. It's psychological in itself in regards to our human behavior. I am 100% understanding of this construct. Why? Because I live it just like you guys. Yes, I have a portfolio. I manage myself, right? Yes, I see stocks that go up. So let's talk about this current example. We're not going to mention any names individually, but we're just going to talk about it in a broader context. So you wake up and there's maybe some threads. You may be on a social media thread and you're hearing certain things about, oh, stock XYZ, man. It has a heavy short interest. Stock XYZ, man. It has, we need to go ahead and buy this, man. Everybody needs to go ahead and buy this company. It did X amount of dollars over a weekend, and people are thinking this company is going south. It was a holiday weekend, and this company did X amount in sales. And the next thing you know, the stock starts to creep a little bit higher in what we call pre-market. Next thing you know, CNBC, Bloomberg, or Fox News starts to report about some unusual activity in stock XYZ. And the next thing you know, the herd mentality starts to come. And a couple hours go by, stock's up 20%, 30%, and you're wondering, that's very interesting. Well, it's just a blip. It'll come back down. I'm not worried about it. So you don't do anything, but you sit there and watch. The stock ends up the day about 30%. Okay, it happens, but it's not sustainable. It won't go up the next day. It won't happen. You wake up the following morning and it's pre-market and you see the stock up another 40% or 50%. You're like, oh my gosh, if I would have just purchased this stock yesterday, I could sell it right now in the pre-market. And by the way, this is a recommendation on our part. Don't participate in things in pre-market or after hours unless you're going to invest in that particular security. Investing means you're going to hold that for a longer period of time, more than an hour, right? Talking about years down the line. So we're totally against investing in pre-market or after hours unless you're making an investment. So stock's up another 50%. You're hitting yourself. You're hitting yourself. You're texting your buddy saying, man, I could have bought that thing when it was at X and now it's at Y. You know how much money I could have had? We've all done this. We've all done it. So you start really thinking, man, you know what? I can probably get in today. But when I get in, what's going to happen? It's just going to dump in my face. It's going to dump in my face. I'm not going to be that guy. I don't want to be left holding the bag. So you say, you know what? No, I'm good. This thing's going to go down. I'm not worried about it. I'm just going to sit here and watch. But it doesn't go down the second day, does it? It goes up. Guess what? Day 3. Up again in the pre-markets. You're saying this thing is running my face almost 120, 150% in a couple of days. What am I to do? What most investors do is they buy the stock. They go out and buy the stock that day. And they do it in pre-market. They say, I'm not letting this happen to me again. I'm going to run this thing. I'm going to get in and I'm going to get out. That's generally the day the stock goes down. And it goes down hard. And you always wonder, why am I the only one? I'm the guy with the bag. I'm holding this bag that I'm hoping the stock comes back. Well, you've top ticked this stock. You bought it up here. And you wait, and now it's down here. It's cut in half. And you're saying, you know what? It's going to come back up. And no, it's not. Very rarely does. That's the plight of everyday investors in this game. There are a lot up here, and there are very few down here, because what you're going to hear about in the media is everybody that's down here says, "Oh, I bought it when it was born. I bought it when the day before that." You're going to hear about all the good and never the bad, because the majority of people are here trying to get out and get their money back. Fear of missing out, my friends. I get it. I've been there. I live it every single day. We've all done it. And it's all because of what the memes, these new meme stocks. So what is a meme stock? Well, a meme stock is nothing more than these stocks that have been pushed on these forums. I'm not going to mention any forums in particular, but what I'm willing to do is talk to you about what it all means. A meme stock is a social media stock, a stock that has actually been pushed not only from a media perspective, but on social platforms. I'm sure regulation will come down on this in a year or two, or maybe 10, because your regulation is always behind. But in regards to this, it's like, will there be a CEO of a particular company coming out and saying how much money they've put into a certain security or currency? Will there be a powerful person that likes to say things about X stock XYZ that can push a stock up? Or will there be a group of herd memesters from a thread that can go out and buy small portions of a stock to push it higher? It's all about human psychology, herd mentality. These meme stocks that continually get pushed with very little valuation. What do I mean by that? What do I mean about the memes? What I mean is that these stocks are going tenfold, fivefold, threefold on zero fundamentals. So before you get involved in these meme stocks and the FOMO trade, understand what you're buying. Understand that you're not buying a company that, from a valuation perspective, is there yet. You're buying it on the prospects that it'll be there. So it's important to understand that before you make these trades, have your house in order. You know our philosophy. Our philosophy is what? We're going to diversify across all different asset classes. We're going to get as much return per level of risk that we're willing to take. We're going to do 15 to 20% of our gross income in the savings every single year. And we're going to have debts lower than what we can get in the overall stock market. We're going to borrow money at lower rates than we can get a rate of return. If we're doing all of these things, by all means, go have fun with a little bit of cash because you're doing what's right. You're doing all the good things. But this is the story about the tortoise and the hare. It's the same story. Who wins? The tortoise won. The hare went out there quickly, ran, saw the FOMO trade, got in on that, made big money, did all these different things, and sat on it. The tortoise basically just put dollar cost averages into the stock market every single month, diversified his portfolio, very, very boring. Didn't go for the meme trades. It's like, oh, it's fine. Let the hare do all of that. I'll be the tortoise. The hare is making tons of money. The hare is killing it. He's driving around in Maseratis. Then the hare decides to do what? Stake his money on another big bet. What happens? He loses it all. But the tortoise is still just plopping dollars in the market every single month, saving 15 to 20%, diversifying his portfolio across all different asset classes. Hey, I'm okay. Because the tortoise will win the game. That's the moral of the story. Let's be the tortoise here. Hey, thank you guys for joining the 9 Innings podcast. Thank you guys for listening to our YouTube station. Thank you guys for just going to the iTunes podcast station, 9 Innings Capital Group. Please don't hesitate to contact us here at 9innings at 9icapgroup.com for your questions. Go to the website, www.9inningscapitalgroup.com, if you have any questions, comments, concerns, or if you want to book an appointment. Once again, I'm Kevin Thompson, founder and CEO of 9 Innings Capital Group. As you know, we are here to do what? Educate, empower, and engage. And that's what we're here to do every single week. Thank you, guys. Stay safe. Stay humble. God bless.